I'm trying to promote him to panelist.
Okay. I'll start you off,
There he
Dale,
goes.
with Gareth.
Go ahead.
I'm sitting there
He's
watching
there.
Bitcoin, and I know Gareth has been, more of a Bitcoin bear. One thing that I have to say is I don't like the price action in Bitcoin. It's trading extremely heavy right now. And, I look at it and I'm like, man, I think this is at a risk of pushing below. And I know him and I have been looking at the same channel supports for a while that come in around 35,000, somewhere around there.
So what's the verdict, Gareth?
Yeah, I mean, I'm in the
Hey,
same
Gareth, how are you?
I'm doing really, really well. Thank you guys for having me. How's it going?
Good.
I'm actually going to pass it over to you and Dale. I just wanted to say, I don't know about you, the way you're looking at it, but man, I think Bitcoin's trading real heavy. I tried buying Bitcoin after that BlackRock bid came in. I think it was right here around the 40,000 level, and we spiked up to like 42, 43,000. And it came sliding back down to like my break-even point. And I just said, you know what, I'm done with it. But it's trading heavy. What are your thoughts?
No, I'm right in the same camp there. It's hammering on that kind of trend line there. If you connect the lows from January and the lows from I believe it's late February, and it's barely holding on. And what's interesting is that we always notice that you're always at a pivotal level going into a pivotal event, right? So you have the Federal Reserve tomorrow, and it's hanging on that trend line right there. And so you're either going to get a slightly less hawkish statement or just the hawkish that we're expecting. And it probably is going to either tip Bitcoin over the edge, or maybe it can save it for a little bit of time. But I think inevitably it's going to go lower. I mean, the channel is a bearish flag pattern. It is what it is. I've learned not to question the charts in my career, because every time I question it, I'm wrong and I lose money.
Well, that's the one thing when you do question yourself, a lot of times when you know what's right, that's what happens as a trader, right? I mean, it just does. So, hey, I'm going to pass you over to Dale. I want to say, great to have you here. I love having you on Trader Summit as well. You're a lot of fun to listen to. You got a lot of great ideas. So, everybody, make sure you stick around. Dale, it's all yours.
Okay, Blake, team, great job again today, like every day. You know what it's like to have a dream team, Gareth, right?
Absolutely.
I mean, it makes you better.
Yes, it does. The more great minds can get together, the better the information always.
So did you want to share your screen today, Gareth?
Yeah, absolutely. Let me pop it up right now here.
And while you're doing it, everyone, Gareth is the CEO and president of In the Money Stocks, ITMS. And last time you were here with me, Gareth, you had that trend line in the S&P that you thought was going to be broken.
Yeah.
And it was broken with a vengeance. And, we've had that move down. That was a great call. And that was early in the year. And you had that line for weeks and months before. So people pay attention to your charts now, man, because everyone's looking at the Gareth lines.
Nice. So you're right. We did break that. It was a very kind of this very tight channel that was trading here. And in fact, I took it off my chart because I don't like to have too many lines on the chart, but it was right up under here, I remember. And then it did.
You should have made an NFT out of that chart.
I should have. You're right, man. I got to even learn how to do that kind of stuff. I'm so behind the times.
Well, I still don't even know what it means, but I use it in my act. Okay, so all right, so
non-fungus token. I think something about a fungus. No, I'm just kidding.
All right, so here we are, sitting at major support, going into the Fed meeting here. You think we're going to break down? I mean, sentiment saying we should have a rip your face off rally.
So it's kind of interesting here, right? I'm going to get a couple of these trend lines out of here. So yeah, I mean, we did hit support yesterday, and we saw a nice reversal in the S&P 500, and a lot of people were kind of surprised, like, oh, why did we have this? And I think the bottom line is you had this pretty steep decline over the last 2 weeks, and you have some shorts out there that are saying, okay, listen, ultimately, we think the market might go lower, but I don't want to have all my shorts going into a Fed decision. That's a lot of risk on the table. So it was a little bit of a de-risking, saying, okay, let me cover some of my shorts and ahead of the Federal Reserve. And I think that's why you got this nice little bounce yesterday. I also think there's a hope that we finally tagged 3% on the 10-year. And I think there's a general thinking, and I'm actually in this camp in the near term, that we should get a pullback on yields. So the hope is maybe that's telling us the Fed will be slightly less hawkish tomorrow in their statement, and the market is anticipating that a little as well. And so I ultimately think rates could go higher, but usually around these even numbers, you do get some sort of retrace back down. If I show my my 10-year, let's look at the 10-year yield chart here.
You have some divergence in the 10-year.
Yeah.
And also yesterday when S&Ps and NASDAQ was making a new low, the semis put in a higher low.
100%. That's a great point. I saw that as well. And early in the day, I was thinking to myself, okay, that's interesting. Usually the semis are a great leading indicator, and they sure were yesterday as well. So on the 10-year here, you aren't quite to this double top here from 2018, but you're pretty darn close. But I think ultimately, usually when you see a breakout, and you can see this trend line goes all the way back to 1987, which is just kind of interesting since that was the last time we had that big crash, the 87 crash. But the trend line itself, usually when you break out above it, there's at some point, whether we go up here or whether it's right here, you see kind of a retrace and test of that line. So I could see, maybe yields going a slight bit higher to 3.15 or something, but ultimately a pullback to 2.5, 2.55, somewhere in that vicinity could be in store. And I think that would be short-term positive for technology stocks. Okay. The only negative is the pullback because the Fed is slightly less hawkish than the market anticipates, or is it because the economy is weakening so quickly that we're going into a recession? And in which case, longer term, that's really bad for stocks, right? It means lower profits and all that fun stuff. So it's going to be interesting to see here how this plays out.
And then followed up by NFP on Friday, where if it is a weak number, that could definitely add fuel to the fire for lower yield short term.
Yeah, you're 100% right. And I would dare say that I always am a believer that even though the month, we ended the month, but I'm always a believer that the Federal Reserve sees these numbers ahead of time, or at least the rough numbers, maybe not the exact final numbers. So basically, when we hear from the Fed tomorrow, if they're slightly less hawkish, that might also mean that it's going to be a weaker number on Friday than anticipated.
Interesting. Okay. And the commodity pullback we've had, a big break in gold from 2 weeks ago.
Yeah.
And silver even worse.
Yeah. So I think gold here, this is doing exactly what it should do. So let me just kind of clean up my chart. So you had two trend lines here, and this is the weekly. So we're going back to 2020 on this chart, but you can see that both of them basically were right in this area around 1850. And we broke out. So this is an actual legitimate breakout on the chart that we had early in kind of February and March. And it coincided with the invasion of Ukraine.
Right.
But following, just like we were looking on the yield chart, this is almost like a fast forward on the yield chart, where what you expect is you kind of expect a retrace into this level, and then it gets its next legs under it and starts to take off. So I'm in the camp that, there might be a little bit more downside, but it's very minimal at this point, maybe to 1825, 1850 area. And then I think the next leg up on gold begins. I actually did buy silver via SLV over the last few days. And that's basically just looking at, let me go to the daily chart here.
I know.
But this is an incredible literally no green candles on the daily chart of silver for the last, 2.5 weeks here, which is incredible to see. And look at all the support you're coming into down here. So, I'm not necessarily marrying this position for the long term, but on a technical basis, I got to believe there's going to be some sort of technical bounce down here.
Aren't you a believer that Mr. Market's such a mean guy that everyone who's looking for a market direction gets shaken out before it happens? And wouldn't that include a stop hunt under 2150 of those lows in October and December?
Yeah, so the market does have a way of doing that, 100% right. And what I do is I compensate for that fact, and I've learned that the hard way in my early career more often than I'd like to admit.
Using less leverage.
Yes, correct. So for instance, I'm only in about 2% of my portfolio in silver right now. I'm willing to go up to probably 6 to 8%, right? So I'm basically dipping the proverbial toe in the water, knowing that if they try to shake and we go down here, I can add a little bit and, right in this vicinity here, just in case it is a shakeout.
Okay. Yeah. Nice looks. Any view on the beast? And that's US dollar yen.
Yeah, that is unbelievable.
It was unbelievable to me. I've been around for a couple years. 5,
Yeah,
10
yeah.
years
And
I've been,
I mean, you don't see moves in the currency market like this very often, and I'm sure you can attest to that, Dale. Yeah, it's remarkable. I don't think it's going to last personally. If you go to the DXY itself, you should be, at least according to this chart, you should be right around a pullback area. So you can see going back to 2000 and December 2016, we were right at this high. And again, what I look for is not just highs, but how does it get there, right? So if it meanders slowly and it pulls back and it kind of a winding, gentle river, well, then the pullback is usually very gentle. This happens to be one of the most dramatic moves up in the dollar we have seen in a long time. So I would actually expect a pretty dramatic pullback, maybe in this range right down here to the 99.50 area on the DXY. So I do think that we are due for some sort of pretty sharp pullback, whether that's some sort of resolution at some point in between Russia and Ukraine, or if there's some other event. But I do think that it's important for investors to just notice what's going on. There's slowly starting to be this kind of movement away from the dollar by China. China's now buying Russian oil in yuan. We've heard that Saudi Arabia was now accepting oil in yuan as well. So I talked about this as much as 6 to 12 months ago, how when China introduced the digital yuan, I right away said, okay, guys, this is them going on the path of wanting to have the reserve currency of the world be the digital yuan. And honestly, I think we're seeing more and more of these little things. So again, this doesn't really speak to what's currently going on with the dollar, because the dollar is reacting to fear, it's reacting to uncertainty, and it's still that store of safety for the global markets. But I do think over the next 5-10 years, you will see a weakening consecutive, just constant weakening of the dollar as more people shift away, or more countries, I should say.
Okay. Highest conviction scenario we'll wrap it with. And it could be what we talked about already.
Yeah. So
I know you're like that, because you're a discretionary trader. And I know when I go over charts, it doesn't mean it's going to be the one that works, but I have degrees of conviction on different analysis that there's some that, you can almost taste it. So is this yours right here? This pullback in gold between
I think
18
this
and a
is
quarter. Yeah.
This is the buy that I think is going to be the key. And again, I think 1850 to 18 and a quarter in this vicinity, if you can get it down there, I think it's the performer I called it as the best performer of 2022. I'm still in that camp, and you're getting a second chance to pick it up if you didn't when it gets down there. And the concept here for me, the forecasting is that basically the market's beginning to think the Fed is going to get inflation under control. I think by year end, we clearly see that even with higher rates, inflation maybe comes down to 5 or 6%. And then we're going to see gold. Gold continue up as inflation sticks around 5 or 6% for the next many, many years. And we actually see a recession come into play. So I think gold is the safety play here. It's been an underperformer for so long. I think it finally has that 1970s type move to the upside. And I think that is my highest conviction over the next 6-12 months.
So then would you be expecting a continuation of the move up in the gold silver ratio? Because definitely, the ratio shown the relative strength in gold compared to silver in the last,
that's
almost like a breakout last week.
Yeah. So I actually do think silver starts to participate. Obviously, the industrial side of silver is what's keeping it under wraps a little bit, because people are starting to fear a global recession. But I actually think that the longer you see these inflation numbers stick around, the more people are going to say, okay, yeah, gold is the pure play, but all these commodities are going to see higher moves either way. So I do think that maybe it sticks around this area. I do think gold again is the pure play of the kind of the no-brainer one, but silver I still think actually does relatively well over the next 12 plus months.
Okay, Gareth. You want to show your website and where people could find you?
Oh, sure. That would be wonderful. Thank you. So inthemoneystocks.com and is the place. And here my name is right here. That's my service underneath it, verified investing alerts. And basically what I do is I put out trade alerts, trade signals. As I act on them, I put them out and I give
your deck, man. Where is it?
Oh, the deck?
Yeah.
Oh, you mean for the fund?
No, on the last page that you showed, the
Oh,
deck.
gotcha.
Huh?
Gotcha. Oh yeah, I wish that was mine. Not quite that nice. I do
You know,
wish.
I see. I have my own jet. I have a few pictures I could Photoshop that shows me flying the jet.
Yeah.
To meet my clients. Oh, and the helicopter.
Oh
I land
yeah,
on.
yeah. Don't forget
I land on top of
the
buildings.
Lambos and Ferraris and everything in the garage
Don't you
too.
want to be like me, except not as old? Anyway,
If you're like, I don't know, now I've got the kids and I had to get rid of my sports car because it just doesn't. It's not practical anymore when you got a 2-seater and you got four people. But yeah,
Anyway, it's always great talking to you. I love your looks. Your charts are real clean, Gareth, and really appreciate you coming in today. And
awesome. Thank you.
Say hi to my buddy and trading warrior brother Nick. And
Will do.
I always root for you guys.
Yeah, and thank you
We
so
do.
much, Dale, and thank you for having us on. And it's always a pleasure to give you guys my views, and I appreciate it.
Okay, everyone, Gareth Soloway, and you could follow him at ITMS. Do you have your own individual Twitter handle?
Yeah, at Gareth Soloway. So just at my
Okay.
first last name. It's super easy to find me there, and keep plugging away. I post usually a couple times, really some interesting stuff on there. So thank you.
All right, so may all your calls be answered, buddy.
Thank you. You guys too. Thank you.
All right, Gareth Soloway, everyone. Hope you guys have a good turnaround Tuesday. Gareth was very efficient at giving a lot of views in a fairly short period of time, and this is why we bring in great guys like this to expand your universe of ideas. You could join the team in, what are we talking about? 22 minutes. Yeah, call it that. I can't even do the math now. Anyway, thank you, everyone. Hi, AJ. Anyway, I'll get my calculator out and I'll figure out. Let's see, it's 12 and 27 minutes. 27 minutes. You could join the team on the morning edge to get the edge for the rest of the day. Get some good sleep tonight, because we'll be reacting to reactions tomorrow, right, guys? Adios. Remember, don't just count your pips, count your blessings. Do the right thing today, and tomorrow takes care of itself. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.